Good morning, everybody. This is Patrick Montes de Oca with the live trading room for the Equity Management Academy. What I would like to do is take a look at a report that we published in Trader Planet on December 16th of 2016, titled, "What is Fibonacci telling us about gold?" On this report, I was quoted that since the high of 1378, we have come down all the way to almost a 78.6% retracement, Fibonacci correction. The majority of the time when the market comes down to this level, it usually signifies a completion of a pattern. The closer you can buy into that 78.6% retracement, the lower the risk. I recommended placing a stop at 1116, which is the price with the highest probability of marking a price reversal. If gold closes below 1116, then this leg and its pattern will be negated. I said the market then would need to be watched to determine which direction it is likely to move. If we take a look at the gold market here, and we basically see what has transpired since December 15th, we see that we have made a low of 1124, and we are currently trading at 1165.20, and that's more than a $40 move since this report was published, or a $4,000 gain in the futures contract. We're going to take a look right now in the futures contract for February gold and define exactly where this market is headed for by using a combination of several Fibonacci trading tools like Fibonacci retracements, Fibonacci fan trend lines, and it will give us a very good idea of where we potentially are going to see the gold market move over the next few weeks. Based on this pattern, we also are using the 9-day moving average here that you see, and you can clearly see here the market price has crossed above that short-term 9-day moving average that we use to identify the uptrend momentum, the short-term trend momentum, which now has turned up. On the 29th, it turned up, and now we are following a continuation pattern that projects prices basically up to the first level of the Fibonacci resistance of 1203. The second level is 1236, and the third level of resistance is 1267.50. So it appears the market path of least resistance is to the upside, and particularly if we add the algorithms that we use to trade this market live here at the Equity Management Academy trading room, we can see clearly in using the daily algorithms and the weekly algorithms, as you see here, that the price coming down to the blue levels, as we call it, which identify demand, has been validated on the daily and the weekly patterns. By coming down to these levels, our algorithms were able to identify what we call harmonic timing. When the daily price matches the weekly price, that's what basically we call harmonic convergence, harmonic alignment. And you can clearly see here that the price tested these levels twice. When it moved up above the B2 level and the B1 level, almost are at the same price, particularly above the 9-day moving average, it was a very clear signal for us that the trend has shifted to the upside, and that we want to buy corrections into demand and look to sell the levels of supply, or the levels that you see here in red, which basically represent the supply zone. As the price moves up into the supply zone, depending on the strength of that demand, the price will absorb this supply that has been identified here, and by closing above this supply zone will become or resistance will become support for the next fractal in higher prices that point all the way up to 1265 to 1270 approximately from where we are right now. So we're looking from where we are right now, a continuation pattern of about $100 in the price of gold to the upside over the next few weeks. We'll continue to take a look at the signal and follow it and use these incredible trading tools called Fibonacci retracements, Fibonacci trend lines, as well as our own proprietary algorithms in providing you a very transparent picture of where gold is going over the next few weeks. This is Patrick Montes de Oca. Once again, I thank you for the opportunity to share this information with you. And if you would like to contact me, please feel free to do so. You can email me at support@ema2trade.com, or you can call me directly if you would like to at 805 area code 418-1744. No obligation whatsoever. We'll show you what we do live here in the trading room and how we use this incredible intelligence, whether you're a self-subscriber, institutional trader, or just want to learn how to trade these markets intelligently. This is Patrick Montes de Oca. Once again, thank you for the time to spend with you. And until next time, my friends, be well, take care. Have a very, very happy and prosperous and joyful new year.